all right. I think, all right, here, we're about to go live. We're gonna go live. All right. We are live. Okay, we got the Fed rate cut decision in about what's it? We got the decision in about 1 minute, I believe. So yeah, everyone, we're live. Let's see. All right, we got one person on stream. That's cool. Welcome. Welcome back, Tatiana. Welcome to the stream. All right, so we have, let's see. I might try to get the Fed on, or get the decision, or stream the video later. All right, so we get the Fed funds rate in about 4 minutes. I'm gonna actually kind of move this over and show it over here. All right, so you can kind of see it right there. Whenever it comes in, that'll be kind of the decision. We'll watch the SPY over here. Try to move it over a little bit. All right, so there we go. All right, so one thing I kind of noticed, hold up, gotta pull that back up. So yeah, we got 3 minutes, but one thing I kind of noticed while this was, while the market was closed, is that I had the trend line drawn a little bit. I had it drawn on a 4 hour, but on the 15-minute, you sold some stuff you didn't like today, Eve, and let me take a look at it. Main thing, reinvested, half profits. All right, let me check the charts on that. Or actually, I'm trying to wait for this decision. All right, so we got 2 minutes. Then we'll probably see some volatility going. Here, I'm going to pull this over to the other screen for now. Put half in EL and the other half in ET. Oh, put half in EL and ET and other half going to do options with. Hey, at least you have a plan. I haven't done anything today, or at least not when it comes to trading. I've kind of just been watching, but I'm kind of glad because if we look at the SPY, it's kind of just been in a range. Hey, welcome back, Oliver. Is it lunchtime? I hope Apple, didn't you say you had some puts on Apple? I hope it come down. Peter Gale, welcome back. Yeah, so everything for the most part, aside from Apple kind of going crazy to the upside, has been in a range today. And then PayPal's been running too. PayPal is up. And I'm liking that. All right, so we got the Fed funds rate decision, and that was just an idea. You didn't actually grab it. Hey, I'm glad you didn't grab it because Apple has not done anything, man. or at least nothing to the downside. So we're about to get a move here in about 14 seconds. There's a good chance we'll see some large moves. I'm probably not going to play this here. Let me actually move up to higher time frame. So we have support currently, I'll say 560. So we got our decision. Looking right here, you can see it's pending. So more than likely we got the 50, even though it hasn't showed yet. So we got like a huge break to the upside. We're coming up here to more than likely test this level, this 566, come test all-time highs. All right, yo, hold up. Let me see if it updated. It still says pending. Come on now. So yeah, we're rocketing up, but here, let me drop down to a 5-minute. Not sure I trust it yet. I'm gonna let it make its range, and all right, so they went with half a point, so we are up. I'm gonna go up to a higher time frame to see. Okay, we're in new territory. So from here, I mean, you can kind of, you're playing puts. I'm not I wouldn't play puts just yet because, yo, anything can happen. Like, puts may be a good move, but kind of knowing where it is, I'm more hesitant to play puts on the SPY, but on the Qs, we have seen these levels before, so we can kind of know where the next levels of resistance are. So let's see. So Qs took out that level. Next level, real level of resistance is going to be about 80 on the Qs. I'm gonna draw that right there. Then we got like this 82 kind of level. And I'm gonna leave that alone. Yeah, so I'm gonna drop down and I'm gonna just kind of watch. So I want to see what kind of range it establishes, and then ideally whenever Jerome Powell gets on to speak in about 28 minutes, I'm gonna try to find the live stream so we can listen to it, but it typically runs up whenever he's speaking, and yeah, I'll try to play that. Anthony, my earlier AMD call, let's see. Your 150 AMD call. Oh yeah, that went crazy. Here, let's see the trend line. All right, so you got a pop. I mean, you got your pop. So 152.80 was a high. Yeah, it was looking good on that. All right, so we're back here at all-time highs. Once again, I want to watch it on a lower time frame. And I really just want to give it some time to see what comes to this, because actually, because right now this could be liquidity. You said you can't see AMD. So AMD, the chart on AMD is right over here, and I think he got in around, I think he said 149.77, and we got that pop for interest rates. All right, you see this right here. This is why I didn't want to initially. Oh wait, hold on. This is why I didn't initially want to get in on that move. So Oliver, you probably could have made money off puts, but the question is, like, when is this going to stop? Yeah, you said TJX just took off. Honestly, the majority of the market probably just took off. So I'm gonna just focus on the SPY and the Qs for now. just for simplicity's sake. Right now it's looking like we still have resistance at this 476 level. Still haven't really got a real break on the Qs. You said maybe it's me, but I can only see Apple and SPY. Are you talking about your chart, or are you talking about what you see for me? Oh, you're talking about okay, so my stream is not moving. All right, 1 second. Let me take this down and see if we can. Yeah, let me see if we can get a move on this. Let me just turn this off. Or let me remove this. It's gonna go away for a second. And then I'm gonna add another one. So it's probably black right now. Let me see if I can add in. Let's see. How do I pick this? All right, there we go. So you should see it now. All right, cool. Yeah, sorry about that. Ooh, hold up. I wanted to look at NVDA as well. All right, so NVIDIA is still kind of trading in this range. Like what I'm really looking for. Alex, SPY just, oh yeah. Yeah, right now we kind of just have to, like I'm not doing anything until we have Powell in about 24 minutes. Right now I'm just kind of letting the range set itself. This would, had we had calls right here, this would have been a good play, good move, but you know, I only got a little bit to mess with on this Robinhood account, so. All right, so let's see how things moved. I mean, things are still going up, still bullish. We definitely broke trend on the SPY, or at least on the 5-minute. Oh, you said you were in puts. Yeah, puts got taken out, but honestly, it wouldn't surprise me if we come back down and take out this low right here, because let me go back up to the 15. What I see right here, I mean, we did kind of come in here and tap into demand, but what I see right here is potential liquidity. So ideally, if it came to another setup for the future, let's see. I guess I don't necessarily see one. Let me go down to a 10-minute. Yeah, we're gonna wait for Jerome. Yeah, because right here, heavy liquidity. That would have been a good quick trade if we were in it, but this is also how you get ripped. All right, so Tesla has a good pop as well. Tesla looks like it's if we see Tesla get and hold back above this trend line, that'll be good too. But yeah, I want to see some on the 15-minute. I want to see some stuff like actually staying above these levels. I'm not too concerned about that trend line. I'm watching these larger trend lines that I have drawn. So everything is still trading in a range. Yeah, gotta wait for Papa Powell to talk. All right, yeah, my hopes for this session is to, on my larger account, I want to find something to potentially swing to tomorrow. And then on the Robinhood, I want to see if we can get a quick day trade in. It's like, if I wanted to be risky and take a chance, I would have grabbed a call. But let me see what the VIX is looking like. All right, so the VIX is coming down a little bit. So maybe some of these options are losing their volatility, or maybe some of the options are losing their premium. That would be nice. All right, let me see if I'm going to see if I can find the stream that it's going to be on. That way, whenever he comes up to talk, I'll already have it ready, and we'll listen to it together. What's the ticker for the VIX? I think it's legit VIX. It kind of depends what platform you're looking on. I know VIX, if you're on TradingView, it's just VIX. But when it comes to the volatility index on other platforms, like I know Robinhood won't have it. Yeah, Robinhood doesn't have it. I'm not sure about Moomoo. Let me see. All right, so I can show y'all here. Let me show y'all. I got a notification from CNBC talking about what changed in the Fed. Actually, it's not even loading. Let's see. I mean, if it loads, I'll share it with y'all, but right now it's not loading. So we're gonna come in, oh yeah, that's the index, or that's like that's one way to trade it. UVXY. All right, so we're coming back down. So some other areas of potential interest would be, or like if you're trying to pick it up, would be maybe 563 would be a good area. So maybe I try to go, let me see how much options are going for. Actually, I'm not going to, I'm going to ride the momentum. Oh, hold on, wrong. So I'm going to look at the momentum on the SPY. Oh, we're on the 5 minute, okay. I'm going to try to ride the momentum. I want to look and see how much options contracts are, though. It's like if we come down, make new lows, like if we come back down to this 561 level, I might grab a call for while he's speaking. Dang, they're kind of pricey. All right, so oh no, I can't even. If I'm on Robinhood, I actually got to get contracts for tomorrow too, because they'll try to cut me out. All right, so if we continue to pull back, I'm kind of looking at a 568 call. How high did we get today? 568. And it would be for tomorrow. But that's if we continue to pull back. But that may have been it. And if I get that call, that would be me kind of throwing everything I got at a call. So I'm, once again, not going to rush into that. All right, so let's see. Yeah, we're selling off. Let us sell off. Come back down to 560. I dare you. And usually the way it goes with Powell is like whenever he is reading the statement that came out. Okay, just updated my trading view. Wait, hold on. Why can't I see it? how can I view the charts at the same time? So if you want to do that, right here on the right, like I'm not sure if you're on your computer, but if you are, there's kind of this, it's probably a square on yours, but if you click on it, it's up here and you can pick your layout. And this is kind of how I chose to do mine. All right, yeah, so yeah, if I change this to this, it's just a square. If I go 2, yeah, it's like that. All right, so one thing I noticed, Tesla on the 15 is still kind of like riding up. Hey, no problem, family, no problem. All right, so we're getting, it looks like this trend line would have been the move for the trade. I didn't want to get in too early, so I didn't want to take any chances. Honestly, when you're not trading with a lot, one of the most important things you can do is preserve your capital. It's like that'll go a lot further than trying to rush and like make it grow. There will come a point when we get some clear signals, and we can take advantage of that when we actually get them. Let's see. When I was working out today, I saw the SPY kind of drop down to this 561 level. I didn't actually see it at this level, but I saw it break the trend line. So I think it had initially broke at like 562.50, somewhere in that range on the higher time frame. And I'm like, oh, it broke down. And I was like, it's not going to stay there long. And then I kind of watched it. I'm like, oh, it's still selling off. But I didn't do anything. I'm like, yo, it's probably not going to do much. And then it ended up coming back. So I'm glad I didn't do anything. All right, I'm going to see if that statement came out now where I can actually see it. All right, I can share it now. So I'm going to lock that up. We're going to look at my iPhone. All right, so this is what I saw from CNBC. Hey, honestly, no guarantees that we're going to come back down again, but it's definitely possible. Like, I think the market is going to fake us to the upside today, and I feel like we're going to come down, but ultimately it depends on what he says. So Tesla is making a second attempt at crossing this trend line. So that's something right there. I want to see how it responds at this 234 level, because I think if we get 234 and we hold that, I think Tesla might actually be the play. All right, so what changed in the Fed statement? This is a comparison of Wednesday's Federal Open Market Committee statement with the one issued after the Fed's previous policy making. Text removed from the July statement is in red with the horizontal line through the middle. That's kind of small. Text appearing for the first time in the new statement is in red and underlined. Black text, okay. I thought they were going to like specifically say. So Fed slashes interest rates by 0.5 point, an aggressive start to easing. Fed lowers interest rate cuts by 0.5 point. It's cut, first cut since 2020. Oh, Apple could fall to $200 on iPhone worries, and that's when you buy, says Morgan Stanley. Hey, you hear that? You hear that, Oliver? When Apple falls to 200, that's when you buy. Honestly, I don't really like following news headlines for trading, but yeah, that's what they're saying. We might be able to, I don't know. We can close that now. So we got the VIX coming down. We take a quick look at NVIDIA. NVIDIA looks like it's trying to break out too. Curious to see what the options are looking like on NVIDIA real quick. I think honestly I would prefer to trade like a Tesla or NVIDIA over the SPY. Yeah, because I can get calls. Yeah, I would be okay swinging a call for Tesla, but yeah, let's look at NVIDIA as well. Calls on NVIDIA. I think I like NVIDIA the most. 218 or 118 call, or actually it would be 119 now. But here, yeah, we still have the SPY there, but we still have the SPY, but I'm actually pull up Tesla and NVIDIA. They're the most appealing to me right now. Let's go to the 30. On the 30-minute, Tesla still sticking below. Once again on the 30. All right, this doesn't look as... This is why you want to shift through different time frames, because it's like things can look good on one time frame and then you see it on another and it's like, yo, maybe that wasn't the best idea, or maybe that's not the best idea. Because NVIDIA is ultimately still selling off. There's a supply zone on the 30-minute. Looks like it is potentially reacting to. So this actually, had I seen it, this would actually be a good level to take a short, leaving the trend line alone. So yeah, it's possible we can make new lows on NVIDIA. What do we see on Tesla? I mean, Tesla is still kind of in an uptrend for now. So I'm not really looking at any downside on Tesla, but here we'll leave NVIDIA up, come back over to the SPY. SPY on the 30-minute. As of right now, we're still trading in the same range. I want to see us close above this 566 level before I feel comfortable. Haha, I didn't want to say it, but I think NVIDIA is going to go down. So I'm kind of with you, but I'm also trying not to be biased. I think the market is going to come down, but like I think they're going to try to trick us. It's like initially when you hear the rate cut decision of 50 basis points, it's like, yo, that's good. Borrowing is going to be cheaper, all this stuff. But it's like I feel like the market is hurt so bad right now that I don't know. Is the fact that it has to be so big, the fact that we're starting off so big, it's going to like scare the markets. You said... I was looking at a put, as you said, call. Hey, That's why you, hey, trust yourself. Trust yourself. All right, so Chair Jerome Powell explains. All right, so what was I going to say? Let me try to pull up this live stream. Let's see if we can find something. All right, so I'm going to start a live stream. Okay, so right now they're waiting. I'm going to try to pull it up on my screen too, or on my, yeah, I'll try to pull it up on here as well so y'all can see it. I'm going to need y'all to let me know in the chat if y'all see anything going wrong though, because I'm using my iPad for the audio. If the audio sounds wrong on y'all's end, like if y'all hear things happening twice, let me know. So yeah, I'm gonna pull that out, and we're just gonna make that nice and small. See if I can make that smaller. Hold on. Trying to see where the best place to put this is. No, so he didn't just speak. We got the initial statement. So the statement comes out, he reads the statement, and usually the markets actually run up while he speaks. And then after he speaks, if they like what he says, it'll continue going up. And then if they don't like what he says, it'll start selling off when he's answering questions. If they don't like the way he answered questions. So yeah, he should start speaking and come on in like about a minute or so, or about 3 minutes or so. Oh, one moment. Got a message. All right. I see. Yeah. So potentially, I'm trying to see which way I want to go with it, but usually we'll get in and kind of ride the upside, or ride while he's. I think so there's a play. I think I might do like a watch list trade. So I might like practice a trade going in just to see, oh, how much could I make? But I think I'm gonna wait till he starts answering questions because I've been slapped before. So I'm gonna do a watch list trade while I'm gonna do a watch list trade on the SPY while he speaks. I'm gonna come back to a 15-minute chart on the SPY. It's crazy. Everybody's just sitting there waiting. He's gonna probably come out like right on time. So if I were to take a trade on the SPY, I'm not looking at today's contracts. I'm looking at tomorrow's contracts just because of, Robinhood. And I have, right now, it would have to be like a 570 call for me. So that's what I'm going to have my eyes on. And yeah, just kind of, you said, but you don't know it. So everything should be, everything more than likely is going to go up while he's speaking. So he's about to start speaking. Or once he comes out, he's going to be like, good evening or something. And then he's going to read the exact statement that was just released. And then once he's done, he's going to answer questions. I'm starting to question whether or not this... Oh. I didn't even realize the one I was like listening to was... Oh, here he goes. Let's turn him up. I'm going to be quiet now.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace.
I really like an NVDA short here. Just a thought.
And available data.
I'm going to grab one for the watch list.
Growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investments fell back.
SPY's taking off a little bit.
Rising strongly in the first. Improving supply conditions have supported resilient demand in the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year.
Adding that 570 call to my watch list as well.
Low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the S&P is 4.4% at the end of this year, 4/10 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August. And that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the S&P for total PCE inflation is 2.3% this year, and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal,
Oh,
and
Tesla.
labor market conditions were extremely tight.
I
Our
want
primary
upside on
focus
Tesla,
had been on bringing down inflation, and appropriately so.
but I want
We
to.
are acutely
I'm gonna wait for him to answer questions.
hardship as it erodes purchasing power,
Everything's running out
especially
though.
for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished, and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to
All right, we're
lower
rejecting right
our
here,
federal
right
funds
now,
rate by
so
a half
far.
percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario.
That watch list trade on NVIDIA for that 115 put us up
The
13.
median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated,
That's something I would expect.
Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both
He
sides
said
of
they're
the
prepared to
mandate.
respond though. That sounds semi-bullish.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here we go. Here we go.
Thank you, Mr. Chairman, for taking my questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong. First quarter GDP running 3%. So what changed that made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess should we expect more 50s?
I think I want to wait for this candle to close.
Based on what should we make that call? Thank you.
I like Tesla though.
So, okay, a lot of questions in here. Let me jump in. Since the last meeting, okay, the last meeting, we have had a lot of data come in. We've had the two employment reports in
Amazing
July
on
and
PayPal.
August. We've also had two inflation reports, including the one that came in during blackout. We had the QCEW report, which suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the beige book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second, third?
Sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in, based on what shall we make that call?
Sure. So, a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's
really
that's
liking this short on NVIDIA.
We know, as I mentioned in my remarks, that
Still not.
the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we're contemplating. Again, I would point you to the SEP as just an assessment of where
Here, let me.
what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Draw trend line.
Hi, Chris Rugaber, Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year.
Yeah, I'll set that alert right
Does
there.
that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction. And we'll be looking at the way the economy reacts to that. And that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5%.
If we get a break of this trend line, I'm going for it. Put on NVIDIA.
Unemployment is up to 4.2%.
Right now, I'd be looking at the 114
above 2.
for this Friday.
So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation.
Oh, we got a break on Tesla, but the move I would target is smaller and the options contract seem more expensive.
This is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. And what you have is
We'll come back to the spy over here.
accumulation of individual estimates of what that will be in the base case.
Let me.
Howard Schneider with Reuters. How close was this in terms of decision? You do have a first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back,
Yeah, he might fumble the ball on this question. This could make things break loose if the answer's wrong.
Into blackout. And so there was a lot of discussion. back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add that look at the S&P. All 19 of the participants wrote down multiple cuts this year.
Might get a break on the SPY on the
That's a
15.
big
We'll see.
change from June, right? Seven of them wrote down three or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up on that, how does this look? On the pacing here, you expect this to be running every other meeting once we get into next year?
Yeah, we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Hi, Gina Smiley, New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, what's the mechanism there, and what do you see as the risks?
So again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Timmer's Wall Street Journal. Joe, does today's action constitute a catch-up in action given recent substantial revisions?
I'm still waiting on some kind of clear break to take a trade.
Function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue.
Okay. Multiple questions there. So I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong. Sorry, your other question was.
What happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of funds rate relative to what might be expected?
All right, are we going to break?
I think it's about we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation, very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably at 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the S&P. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level. And we're moving at a pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how
All right, this candle closes in 40 seconds or so.
policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrink, but also be cutting rates.
Thank you, Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market?
We are riding these trend lines.
Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. But they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth of economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. But again, it bears watching, and we're watching.
About starting to see rising layoffs. If that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate it. As you know, we're not seeing rising claims, we're not seeing rising layoffs, we're not seeing it, we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some more on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points in cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving at 2%, but at the same time, our plan is that we will be at 2%. Over time. So, and policy, we think is still restrictive, so that should still be happening.
I'm just curious how sensitive you'll be to the labor market since you forecast we are going to see higher unemployment, and it is going to take a significant amount of monetary easing to just maintain it.
So what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Hi, Chair Powell. Rachel Siegel from Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us
Sounds like a
through
good
what
question.
that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important problem. You're at 4.2%. That's, I know.
All right, looks like we might be breaking on NVDA. We'll have to see. Oh, that's on the 5 minute. Let me go back to the 10.
But if you look back over the sweep of the years, that's a low, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be wage increases.
How do you keep a positive mindset after a big L?
Would be over the very long
You
term.
just got to keep your head up. Life moves on.
Coming down to what that sustainable level is, so we feel good about that.
Got to learn from it.
Vacancies over.
We'll go over it after
Unemployed
he's done speaking.
but it's still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person. As measured, it's now below around 1. That's still a very good number, I would say. Quits have come back down to normal levels. I mean, that could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
Expect to learn between now and November that will inform the scale of the cut at the next meeting?
More data than usual.
The Qs are going to move very similarly to NVIDIA. So I would rather trade NVIDIA because it's a little cheaper. But looking at the Qs should move in this range.
And inflation data, we'll get all this data, we'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data.
Hey, Jorman has a point.
Risks, and then go through.
Hey, be sure to smash the like button.
Is policy where we want it to be?
Go to
Foster the achievement of our goals over time. So that's what it is, and that's what we'll be doing.
see. Let's see.
Chair Powell, Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payroll the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends in the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come from job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, then and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just lower hiring rate, which is something we also watch carefully. So it does depend on.
No, I'm watching for the break of this trend line. I'm hoping to get in on NVIDIA. All right.
Yes, so
Close to getting in on NVIDIA. Oh, wait,
not
hold
all,
on.
but I think our committee felt that job openings were so elevated.
Yeah, I'm going for a put on NVIDIA.
Before you hit the part of the curve where job openings
I grabbed a 114
turned
put.
into higher levels.
We'll see if it ends up
And
playing out, but I got it right here.
It's hard to know.
We'll see if we can make it back to that level.
We're very close to that point, if not at it. so that further declines
Grab the
in
114
job
put. I
openings
paid
will translate more directly into unemployment.
paid
But
110 for it.
It's been a great ride down.
May have gotten
We've seen
faked
a
out
lot
though. We'll see.
of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Joe Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a
All right,
question.
here we go.
After we get through all of this, it's just
All right.
great question that we just
Up
we can always
17 on that trade.
Intuitively, many people anyway would say we're probably not going back to
Up
that era
19%,
where there were trillions of
$21,
dollars,
up
sovereign bonds trading
$27.
negative rates, long-term bonds trading negative rates.
This is my target is right here about 114.65.
There was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels.
All right, we got the break on the SPY too. So
that
anybody wanted that?
is probably
Target would be 561 to me. We're up $29, 26% on the trade.
How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth
All right,
presidential
we're up
election.
30% on the trade, $34,
It's always the same. We're always going into this meeting in particular,
$38.
asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's
Oh, yeah,
never
come
about
on.
anything else. Nothing else is discussed. And
So I'm not going to be greedy with this one. I'm just going to, like, as it goes to the target, I'm going to just take it. It could continue going.
Nonetheless,
50
this is what we do. Our
two on that,
is to support the
53%,
economy,
$60.
and if we get it right, this will benefit the American people
All
significantly.
right.
So this really concentrates
Coming to the
mind,
target.
and it's something we all take very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
All right. Come on down.
Thank you, Chair Powell. I'm Jolene Kent with CBS News.
They keep
My
bringing
first
these
question
questions.
Very simply,
I'm gonna turn it
what
down a little
message
bit.
are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it.
Let's go.
More specifically,
Come on
the
to the
economy is growing at a
target.
solid pace. Inflation is coming down closer to our 2% objective over time.
Let's
And the
go.
labor market is still in solid
All right,
shape.
so up
So
63,
our intention is really to
57%.
maintain the strength that we currently see in the U.S. economy. And we'll do that by
I'm gonna get the
returning
sell
rates
ready.
from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Follow up to that. Listening to you talk
Oh,
about
let me actually
inflation
do
moving
something
deeply
real
down
quick.
to
I forgot
2%.
this.
Is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
Let me
No.
actually draw a trend line down
We're
like
not.
that.
So inflation, what we say is we want
Move it to
inflation, the
5.
goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close,
I'm,
but we're not really at 2%.
just try to
And I think we're
ride
going
right
to want
now.
to see it be
See how we do.
around 2% and close to 2% for some time. But we're certainly not doing, we're not.
Hey, good stuff,
saying
Jorman.
mission
Get the
accomplished or
money.
anything like
Get the
that. But
money.
I have
That's
to
what we
say,
like.
though, we're encouraged by the progress that we have made.
This trade is on Robinhood. This is for the $100 account.
Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is?
Check the 10-minute chart.
Yeah.
So
Yeah, we got it.
housing inflation
Yeah.
is the
Check
one
15.
piece that is kind of dragging a bit, if I can say.
This was the entry on the 15.
We know that market rents
Back to the
are
10.
doing what we would want them to do, which is to be moving.
All right, so we're almost to the profit
but they're not
target.
rolling over. The leases that
Again,
are
we're not going to be
rolling
greedy here. Or I'm
are
not going to be greedy.
coming down as much, and OER is coming in
Come
high. So,
on. Let's go.
you know, it's been slower than we expected. I think
Up
we now
57%,
understand that it's going to take
up
some time for those
$65
lower market rents to get into this, but you know, the direction of travel is clear.
Up
As long
68.
as market rents remain, you know, relatively low inflation over time,
Up
that will show up.
72.
Just the time it's
I'm about
taking
to
now
come
several
in,
years
take
rather than
profit.
just one or two cycles of
Come
annual
on.
lease renewals.
Come on
I think we
down.
understand that now, but I don't think the outcome
Real
is
quick.
out again as long as
There we go.
market rents
All
are
right.
under control. The
Sold
outcome
out
is in doubt. So I would
185.
say
So
it's
110
the
to
rest is
185.
the portfolio or of the elements that go into core
Yeah,
PCC
just
inflation
like that.
have
And
behaved
it looks
pretty
like it's
well.
still moving,
You know,
but
they're all,
hey,
they all have
not
some
trying to be
volatility.
greedy with this
We
small
will get down
account.
to 2% inflation, I believe, and I believe that
Right there, yeah.
ultimately we'll get what we
$75.
need to get out of the.
All right, you said what was the break even on my? I don't know what the break even was. Honestly, I got in for 110 on a 114 put. Yeah, I'm gonna stop the stream now. I'm gonna stop J
What's
Powell
the likelihood of that?
because I've
and how,
done the
how
work
do
that
you
I need
react
to
to
do.
that?
But
housing
the
market,
break even on
it's
that
hard
trade was.
to game that
let's
out. The
see.
housing market is in part frozen because
It
of
would have
lock-in
been
with low rates.
so
People
$1
don't
from
wanna sell their
114.
home,
It would have
because they
been
have a very low mortgage, it'd be quite
$12.90. That's
expensive
the
to
break
refinance.
even.
As rates come down,
About down here.
people will
It very
start
well
to
could
move
head
more,
for
and that's
that
probably
because
beginning to happen already. But remember, when that happens,
yeah, looking on the
you've got
4 hour,
you've got a
we
seller,
came
but you've
up
also got a new buyer in
above
many
this,
cases.
and
So
it
it's not,
looks like we could sell off. But
you know,
once again,
obvious
I'm not going to be
how
greedy.
much
I
additional
might
demand that would make. I mean,
might try to look for
the
stuff.
real issue with housing is that we
How much
have
profit?
had
Here, I'm gonna take a screenshot and I'm gonna show
not
you
enough housing.
on the
So
iPhone.
it's going
Let
to
me go
be
to my
challenging. It's
photos.
hard to find to zone
And,
lots that
yeah,
are
I'll
in
pull it
places where
up for
people
you.
want to live.
Here, I'll also
It's
pull up.
all of the aspects of housing are.
Let me
are
take a screenshot
more
of
more
the trade
difficult,
as well, and I'll show
you
you
know,
all on
where
stream
are we
real
going to get the
quick.
supply? And this is not something that the Fed can really
Was it
fix.
NVIDIA?
But I think as we normalize rates,
Oh
you'll
yeah,
see
that
the
would have
housing
been some
market
money if I
normalize.
stayed in that. But
And
hey,
I mean,
no
ultimately,
worries, no
by getting
worries.
inflation broadly down and getting those rates normalized
Alright,
and getting the
so-
housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
All right, so let me go to my photos.
Hi, Victoria Guido with Politico. Just following up on
All
some
right,
of the
so
labor market
here, let's
talk
pull it
earlier.
up.
You know, monetary
Show
policy
you right
operates
here
with
on
long and variable
stream.
lags. And I'm wondering how much
All
you
right, so
see
this
being
is-
able to keep the unemployment
This is
rate
how we
from
did today on the small account,
raising
the
too much
$100 account.
comes from the fact that you're starting to
And
act now, and that's
let's see
going
if
to
we
give
can
people more
swipe
room to
over real
run
quick.
versus just the labor market is strong. And then also, if I could, following up on Nick's question,
And this is
do
the
you
trade I
see
took.
today's 50 basis point move as
Just like
partially
that, right
a
there
response to
on
the fact that
stream.
you didn't cut in July, and that sort of
All right, so you said how's the
You're right about
challenge
lags,
going?
but I would just
All
point
right,
to the
so
overall economy.
I
You
blew
have
the
an
account
economy
up
that is
last
growing
week,
at a
so
solid pace.
if
you
we
look at
take into
forecasters and
account
talk
where
to
the account is
companies,
right now,
they'll say that they think 2025
since I blew the account
should
up
be
and
a
I
good
had
year too. So there's no sense.
and I
the
had
US
$100,
economy basically
it's
fine.
kind of like
If you talk to market
I'm up
participants, I mean,
$19 since
business
I started
people
the
who are actually
challenge.
out there doing business.
So yeah,
I
that's
think,
how the
you know,
challenge
I
is
think
going.
I think our move is timely.
The challenge, I kind
And
of
as I
started
said,
over
you
the
can
challenge again
see
this week on
our
Monday.
50 basis
So
point move
this week
as a
we're
commitment,
looking great. From the challenge,
to
we're
make
up
sure
like
that we don't
$19.
So you're really asking about your second question. You're asking about July, and I guess if you
So yeah,
if
I'm
you
gonna just
ask,
close that out. And
you know,
now
if
I'm
we'd
going to
gotten the
see, I'm
July
going to look
report,
through and see if there's
before the meeting,
anything that
would
just
we have cut?
really
We might
seems
well have.
convincing
We didn't make that
for
decision,
other
but,
moves.
you know, we
Like
might well have. I think
anything for like a.
that's not, you know, that doesn't.
Think about trading TLT. So I know
really answer the
TLT is a
question
big
that we ask
move.
ourselves,
Like
which
that's
is
a
let's
big
look
move
at,
that
you know,
people
with
like
this
to
meeting, we're
watch
looking
and
back
trade.
to
But
the July employment
it's
report,
not
the
like one
August
of my
employment report,
plays.
the two CPI
I know that's a
reports,
big
which
like kind of
came,
economic
course,
move
during
kind of
blackout,
trade.
and
Oh,
all
hold
the other
up.
things that I
Video
mentioned.
still
We're looking
looks.
at all of those things, and we're asking ourselves, what's the right, what's the policy
Yeah,
stance we need to move to? We knew it's clear that we.
So Nvidia is
clearly,
kind of breaking
literally,
below.
everyone on the committee agreed
Let me
that it's
look at
time to
this.
move.
Here, let me look at
It's
NVIDIA
just
on a higher
how
time
big,
frame.
how fast do you go, and what do you think about the paths forward? So this decision we made today had broad
Let me
support on the
delete
committee, and
that.
I've discussed the path ahead.
Kind of confusing myself.
Thank you, Chair Powell.
Because to me,
Elizabeth Schulze
NVIDIA,
with
like I
ABC
like
News.
the
Mortgage
premiums
rates have
on
already
NVIDIA
been
right now.
dropping
They're
in
not.
anticipation of this announcement. How much more should borrowers expect?
Do I full-time trade?
Over the next year?
Kind of
Very
yes,
hard for me
kind
to
of
say.
no.
That's from our
It's like,
standpoint.
it's part
can't
of what
really
I
speak
do
to mortgage
full-time,
rates. I
but
will say
this isn't where all my income
that'll
comes
depend
from.
on how the economy evolves.
I think
Our intention.
I think I
is
can make
we
a
think that our policy
full-time income trading,
was
but
appropriately restrictive.
I also
We
feel
think that
like
it's
right
time to
now, if I
begin
were
the
to
process
just trade,
of,
and that were my only source of income, I feel like I would.
recalibrating it to a level that's more neutral rather than restrictive. We expect that process
I
to
feel
take
like
some
I would
time,
do poorly.
as you can see in the projections
Just
that we
because
released
of, like,
today. And
oh.
as if things work out,
I
according
tried
to
it.
that
I tried to do it
forecast,
when I was traveling.
other rates in the
It
economy
didn't
will come
necessarily
down
go
as
the
well.
best.
However,
I
the rate at which those
have.
things happen will really depend
I
on
would
how
say
the
I
economy
have
performs.
refined my
We
strategy
can't
and
see-
have
we can't
improved
look
at
a year ahead and
trading.
know what the economy's going to be doing.
But I need. I personally feel like I need some sort of
Home prices have
something
stayed so
like
high as rates
some
have
other
gone
sources
up.
of income or
What do you say to those households?
just other money there to
What I
make
can say
me
to the public
feel like
is
kind of
that,
comfortable.
we
So NVIDIA,
had
like
the
I kind
highest
of see
in a
NVIDIA still
burst
in
of
an
inflation.
uptrend. So looking over here,
Many other
I'm looking
countries
at
around the
market
world
structure
had
now,
a
so
similar
we could
burst of
potentially
inflation.
look at
And when
this
that
move
happens, part of the
and we
answer
could
is
say,
that we raise
hey,
interest
NVIDIA
rates in
is
order
in
to
a
cool the
fib
economy
zone,
off in
so
order to
there's a
reduce
potential
inflationary
it pulls
pressures.
up. I'm
It's
not
something
going
that people
to.
experience as pleasant,
Oh no,
but
I'm not going to.
at the end, what you get is low inflation
You
restored,
know what?
price stability restored.
I'm gonna go small on a
A good
NVIDIA
definition of
short,
price
and I'm
stability
going to
is that
target
people in their
110
daily
on
decisions,
my.
they're not thinking about inflation
Moomoo.
anymore. That's
Let me
where
see.
everyone wants to be, is back to what's inflation. You know,
If
just
it's
keep
not
it
too
low,
expensive.
keep it stable.
If it's not
We're restoring that.
overpriced.
So what we're going through now
Because
really
we're back below this trend line.
restores, it will benefit people
Oh no, we're
over
getting to.
a
We're
long
buying up
period of
now.
time. Price stability benefits everybody over
Yeah,
a
I think
long
I'm.
period of
I
time
think
just
I'm
by
done for the
virtual
day.
effect that
I'm
they
done
do
for
now.
the day. Is there anything?
So that's what's
yeah,
been
that
going on, and I
that
think we've made real progress. I
violence, that candle of violence
we
right
don't
there
tell
is
people
telling
how
me,
to think
yo,
about the
it's
economy, of course.
it's
and
time
of
to
course
get out.
People are experiencing high
We're just-
prices as opposed
we're
to
gonna
high
take the
inflation.
dub, and we're just
And we
gonna
understand that's painful.
yeah take it as what it is. Here, let's.
Hi, Chair Powell. Greg Robb from MarketWatch.com.
Here, I'm a.
I was wondering
Actually,
if you
that
could go
that
through- you
little
said just
pullback to the
at the
upside. I'm
beginning
gonna turn
that
Jerome
coming
back
into the
on just to make
blackout,
sure he's not saying
there
anything
was like an open
too
thought of
interesting.
25 or 50. You know, the Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a seven-part question about this, but I mean, could you talk? Would you have cut rates by 50 basis points if the market?
Well, I first want to address this question about how much would you recommend full-time trading? First off, how much money do you need for your lifestyle? Because you know, different people are going to need different amounts for their.
Thank you.
Oh, you think I have two
Try to
windows
do,
open? Let
what
me.
we think is the right thing for the economy at that time. That's what we'll do, and that's what we did today.
Oliver, is
Thank you,
it
Chair Powell.
still?
Simon Rabinovich with The
Let me
Economist.
close
You
my
mentioned very
windows.
quickly you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big
Oliver, do
payroll
you still
revisions.
hear
Does
the
that put your
echo?
focus
Here,
overwhelmingly
let
on
me.
the unemployment rate? And given the SEP projection of 4.4
Okay,
being
echo's gone.
the peak
Cool.
in the cycle, would going
All
above
right,
that
so
be the kind of thing that would trigger
oh yeah, it looks like we're
another
buying
50
back
basis
up.
point cut?
Good thing
So
we got
will
out. But when it comes
continue
to
look at that
first
broad
off,
array of labor
hey,
market data,
don't
including the payroll numbers.
no
We're not
recommendations
discouraging
for me.
We
I'm
will
just a
certainly
regular
look
guy
at
like
those, but
you.
we will mentally tend to
Or maybe
adjust
you're not a
them
regular guy, but
based
you know,
on
I'm
the
just
QCEW
I'm
adjustment
just
that you
another man
referred
like
to.
you. So I'm not
There
doing
isn't a
anything you
bright
can't
line.
do.
You know, it
And
will be
I'm not a financial
the
advisor,
the
so
unemployment
no
rate's very
recommendations here.
important, of course, but
But
there isn't
when
a
it comes
single
to the
statistic or
idea
a single
of
bright line
going full time in
over which that
anything,
thing
when it comes to like
dictate one thing or another. We'll look at each meeting.
like I don't know, just being free. That's kind of how I initially thought about everything.
Labor market.
It's like first off,
about is our policy
how much do you need to live? Like, what's your rent? What's your like car insurance? Like how many bills do you pay each month? And all that whatnot. And it's like
Thanks, Chair Powell. Matt Egan
from there, like once you know how much you need a month, it's like how much do you trade with? It's like
and nothing else factors.
You said ad, one
In
sec.
general, can you talk about whether or not you believe a sitting
I'm
US
assuming you got an
president
ad.
should have a say in Fed decisions on interest rates? Because that's something that former
All right,
President
so
Trump, who obviously appointed
okay, you said the ad's done.
previously
So
suggested, and I know the Fed is designed to be independent.
yeah, when it comes down to like how much to trade with,
So important.
ultimately it depends on how much you need. Because it's like
countries
if
that
you
are
think about it, say
democracies around the
you
world,
make $100
countries that
a
are
day.
sort of
That's
like the
500
United
a week.
States all have
And
what are
that
called independent
is
central
$2
banks. And
grand
the
a
reason
month.
is that
That's
people
not
have
going to
found
quite
over
do it
time
for
that
me. I
insulating
think,
the central bank
but I'm
from
not
direct
like if I were
control by
on my
political
own, I
authorities
probably could do with $2 grand a
avoids,
month. But right now, I
making
think I
monetary
need
policy in a way
anywhere
that
from
that
4
favors
to
maybe people who are
5,000
in office as
a
opposed
month.
to people
So
who are not in office.
if I'm looking
So
at
that's
5,000
the idea.
and I'm trying to split it
I
over,
think
let's
the
say on
data are
average
clear
20
that countries
trading
that have
days,
independent central banks, they get lower inflation, and so we're
that's
not
averaging about
we do our work
250
to serve
a
all
day
Americans. We're
for
not
trades.
serving any
That's
politician, any political
or like
figure,
$12.50
any
for the week.
cause, any issue, nothing. It's
So
just
ultimately,
maximum
it comes
employment
down
and
to
price
how
stability on
much
behalf of all
you need to
Americans.
do.
And that's how
It's
the
like
other
if
central banks
there
are set
are
up. It's a good
multiple approaches you
institutional
can do to
arrangement, which
do
has been
that.
good
You
for the
can
public. And I
say,
hope it,
like, say if you
I
have a
hope and
larger
strongly-
account,
strongly believe that it will.
you could
will
target
continue.
2% profit on options. And like, let's say you have $10,000.
Campbell for American Banker.
10%
Questions.
would be
Couple regulatory developments.
10% on 10,000 would be 1,000. So if you can make 2.5% going in with $10,000, yo, that's 250. But for me, I usually trade with anywhere from like anywhere from 1,000 to 4,000, just kind of just depending on the time,
Fully on board with that approach. And then,
just to keep myself under control.
You know what? Hold the second question.
Okay, sure.
Let me.
For me, when it comes to trading, it's not about like
give you the
making
second
a
question.
full-time income.
The
But
answer to
you
your
said
question is that
you said $4,000 a month. That's a
yes,
lot. I live in.
those
That's
changes
nice.
were negotiated
But
between the agencies.
Jorman,
with
so
my
I
support
was
and
in
with my
Portugal, so I remember what it's like to pay less.
with the idea that we were going to
But
repropose,
what was I going to say?
repropose the changes.
Yeah, 4,000 a
that we-
month.
that,
That's
Vice Chair Barr talked
including
about,
my rent.
and then take comment on
That
it.
kind of pays
So,
for the wife
yes, that-
and
that
I.
is,
So
I-
yeah,
that's
it's like
happening with
it's
my
not just
support.
paying for me; it's paying for my wife too.
That's
And
not a final
then,
proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a we
Yeah,
don't have
things
a
like
calendar date for
one
that.
thing I don't like about
And as
being
for the other
over here
agencies,
as
the
much.
idea
It's like I
is that we're all
love
moving
my car,
together. We're not moving
but
separately.
I
So
don't love the fact that I
I
need a
don't-
car over
I don't
here.
know
So
exactly where that is.
it's
but
like
the
because I
idea
have
is
a
that we
car.
will move as a group to
I
put this
have,
again out for comment, and then
Oh, you're
you know,
Portuguese?
it'll come. The comments will come back.
Hey,
60
that's what's
days
up. What's
later,
up?
And we'll
Yeah, I spent like
dive
6
into
months
them,
in
and we'll try
Portugal.
to bring this to a
But,
conclusion sometime in the first half of next year.
Yeah, Portugal is cheaper, but the prices are running up in Portugal. Like it's not.
Bank regulators.
There are actually things that are cheaper in the U.S. than in Portugal
I would
that I was kind of
bounce
missing
that
when I was
question to
out
Vice
there.
Chair Barr.
It's like,
It's a good question, but I
yeah, the
don't
prices are definitely going up for things in Portugal. But yeah, it's like,
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
okay, so you said, why don't you go funded? So I was trying to get funded in Forex once, like earlier this year.
Even though the policy statement says you
And
view the risks to
like I passed the
inflation and
first
job
round,
growth as roughly balanced.
and then
Given what you've
I
said,
guess I
though,
got too
today, I'm
comfortable because
curious,
I hit
are
my
you
downside
more
limit
worried
and I didn't
about
realize
the
it.
job market
So I failed that one. And then when I was going to
growth
try again,
than inflation? Are they not?
I don't know. It's like like none of
No,
the
I think,
like
I think, and we think they are now.
I forgot the
roughly balanced.
brokerage's name.
So
So
if you
there's
go
like
back for a long
FTMO
time,
and like
the
I think,
risks for
funded
inflation.
trader or
We have
whatever,
historically tight labor
they're
market,
not allowing
historically tight. There was a severe
Americans,
labor
they're not
shortage.
taking Americans
So
for
very,
Forex
very
trading
hot labor
anymore.
market,
So
and we had inflation way
I
above
just
target. So,
stick with
that
options.
said to us,
It's
concentrated
like I'll
inflation, concentrated
eventually
inflation.
get
And we
around
did
to
for a
futures,
while,
but I want
and we
to
kept at that.
make
The
sure I'm
stance
still
that we
doing
put in
options
place
right now because
14 months ago was
I
a
have
stance
some.
that was focused on bringing down
I'm
inflation.
working on
Part of
creating
bringing
some
down
content,
inflation,
some
though,
educational
is
content
cooling
that
off the economy and a little bit
I
cooling off the
intend
labor market. You now
to
have
help
a
others
cooler
do the
labor
same.
market in part because of
And
our
you said,
activities.
yeah,
So what
housing.
that tells you is
Oh
it's
yeah,
time
housing
to
is
change our
crazy
stance. So
in
we did that.
Portugal.
The sense of the
Or
change in the
it's like
stance is that
rent.
we're
I was
recalibrating our policy
rent wasn't
over
bad
time
for me,
to a
but whenever
stance
it
that will
came
be
to
more
like
neutral.
actually
And today,
buying
was,
and
I
owning
think
something
we made
in
a good,
Portugal,
strong start on that.
yeah,
I
that
think it
mess,
was
or at
the
least
right
in
decision,
Lisbon,
and I
because
think it
I
should
was
send
in
a signal
Lisbon.
that we,
It's
we're
like in
committed
Lisbon, that mess is
to coming up with a good
insane.
outcome here.
And you said why futures? What is futures? Futures is, I don't know. So
I don't
futures
think so.
is similar
I don't.
to options,
As I look, well,
but
let me
you
look at it
don't
this way.
have expiration,
I
or you
don't
do
see
have an
anything in the
expiration, but you
economy
don't
right
have
now that
things like
suggests
theta and time
that
decay.
the
So
likelihood of a recession,
it's like if I buy a
a
contract
downturn is elevated.
and
Okay,
and
I
it
don't
goes
see
up,
that. You see
you know,
growth at a solid
the
rate.
stock can or the
You
stock
see
can stay at
inflation
the
coming
same
down. You see a
price
labor market that's
or move
still
up a
at
little
very
bit,
solid levels.
or the stock can stay at the
So-
same
so
price, and I don't have to
really see
worry
that now.
about
Thank you.
it. What was I going to say? I don't have to worry about it losing value just because the price isn't moving. So that's kind of the beauty of futures. Okay, so Jerome is done. Let's see what the market is doing. I'm going to close this out. Yeah. Yeah, but futures is more leveraged stuff. Okay, so it looks like we might continue our way down. So I'm going to get rid of this, but it's like I might be willing to take a little day trade on the SPY. Let's see. If we break below this on the SPY, let me see how expensive option contracts are. Let's check out Moomoo. So options, oh wait. Chain, puts, not today, but tomorrow. Oh yeah, we did not stay below that. Okay. That is probably not happening. So you said what side are you on? This is called TradingView. This is, yeah, if you're curious about TradingView, I have some videos on my channel. And they are all about how to like use the tools in TradingView as well as like how to set it up and clean up your charts and stuff. All right, but yeah, I think I'm gonna call it a day, so I don't end up making any bad decisions. If you're in the Discord, so when it comes to all this stuff like trade copy and whatnot, this stuff isn't my area of expertise. I haven't really gone on about it. Honestly, the ability to copy and leverage your trades, that's beautiful. Like if I took that same trade we took on stream today, like say 10 or 20 more times, that would have been 750 if we took it 10 more times, and 1500 real quick like that if we did it 20 times. So it's like I like the idea, but I haven't done anything with it. But yeah, if you're in the Discord, it's not out of the question that I could find a potential trade, but right now I feel like I'm just looking for stuff. I need to kind of just see it there in order for me to get in anything. So if I get in anything, I will alert in the Discord. So yeah, be on the lookout for that. That's going to do it for the stream today. You said, or like people only copying other people's trades. Wait. Yeah, I'm not sure I fully mean that, but yeah, we're gonna close out for the day. Everyone have a blessed day. Hey, been a fun little stream listening to Jerome. Matthew Manuel signing off, and hey, I want to change your life.